Most of you look forward to the list of declining markets we publish each quarter. We cover about 95% of all U.S. real estate, over 400 local markets. This was the current list at the time I recorded this video. Real estate values on a real or inflation-adjusted basis declined in 148 markets. That's over a third of all U.S. markets. These are 3-month declines. These percentages here on the right, you can multiply them by 4 to get a rough estimate of the annual rate of decline. And if you think that's troubling, it gets worse. We went through this list to see where all these declining markets were concentrated. You can see here, it's extremely broad-based. The yellow highlighting means that state had at least one declining market in the last 3 months. Remember, you don't need a housing bubble to have a catastrophic market crash, and every crash is catastrophic if it happens in your market. What's eye-opening is that this new crash is happening at a time when the average of all U.S. markets is looking pretty good, as you'll see. That's why you haven't heard anything about this. I'm the only one looking underneath the facade of national statistics and analyzing every local market. It's a very different picture when you actually drill down into these local markets. Here's how the real estate boom and bust cycles used to look. Historically, weak or strong areas would be clustered together geographically, like Texas, Oklahoma, and Louisiana. They lost around a third or more of their value in the 1980s, while the entire New England region gained 50 to 100% in value. This is a map showing inflation-adjusted real estate appreciation rates by state back in 1987. Red, orange, and yellow colors mean super hot, appreciating real estate, like you see here in New England. See how the entire region was red hot? At the same time, you'd see other regions losing value, like these oil-rich states here. Pink and purple means declining real estate prices. Then, in the 1990s, the cycles reversed, as they always do. See how real estate prices for the entire New England region are collapsing? New England was sucking wind. The red, orange, and yellow hot market colors turned into pink and purple crashing markets. That's how things used to work. Geographically based big market cycles affecting entire regions. As a real estate investor back then, you could have some confidence that you'd be okay so long as your overall state or region was doing good. Not anymore. That's what's changed. You can see here that 46 out of the 52 states, we included DC and Puerto Rico, are highlighted in yellow. 46 states, almost 90%, have at least one declining market right now. Even when you look at annual data, which is more conservative than quarterly but also slower to catch any changes, we still have 31 states, 60%, with at least one market where prices are actually lower than they were a year ago. Notice I didn't say states with at least one weak or flat market. I said declining. It's widespread, from coast to coast, and it's serious. You now have weak and crashing markets adjacent to hot markets all over the country. Investors will never see this coming, and it won't make the evening news until it's already slapped everyone in the face. Demand is falling on a localized basis right now, and no region is safe. Now look at the same map near the start of 2018. Lots of mediocre blue colors. I mean, all I've been hearing is the polar opposite. The economy is booming and realtors are running out of houses to sell. But if the real estate market is so hot, why aren't we seeing greater demand, stronger appreciation? Red and yellow colors in this map. I'll tell you why. Local market psychology, the driver of all real estate cycles, can and has already turned on a dime in markets all across the country. Unlike the good old days, cycles have become much more homegrown. It's now a radically different picture when you actually look inside each state. We now have strong and weak markets in the same state at the same time. The net effect when you average them together statewide is what you see in this map. Many thousands of you watching this have been following me since before the last crash and already know our track record for identifying the exact start and the exact end of virtually every local real estate cycle in the U.S.